Welcome to the Explainer. You know, life insurance can feel like trying to solve a giant puzzle with a million pieces that all look the same. Well, right now, we're going to give you a map. We'll break down the four main types so you can find the path that's right for your life. And this is the big question, isn't it? Term, whole, universal, variable. I mean, the list just goes on. It can feel like you're just swimming in options. So how do you find the right fit? Let's break it down step by step. So here's our game plan. First, we'll talk about protection that's just for a specific season of life. Then, we'll dive into coverage that's guaranteed to last a lifetime. After that, we'll check out policies that can actually adapt as your life changes. And finally, we'll look at options where insurance meets investing. It's all designed to lead you to find your own personal fit. Okay, let's get one thing straight right off the bat. There is no single best life insurance policy for everyone. Nope, the right choice is always going to be deeply personal. It's the one that fits your life, your goals, your story. To make this all feel a bit more real, let's meet four different people. We've got Angela, Marcus, Lisa, and Eric. Each one is at a totally different stage in their life, and their story is going to help us understand one of the major types of life insurance. All right, first up, let's talk about protection that's really designed for a specific season of your life. And that brings us to term life insurance. So meet Angela. Her needs are really specific, and, they have an end date. She's got that mortgage, and she wants to make sure her kids are protected until they're through college. But her budget's tight, so she needs a lot of protection, but only for a set amount of time. And this is the exact problem that term life insurance was made to solve. It covers you for a specific number of years. That's the term. It's a perfect match for those big financial responsibilities that, thankfully, have a finish line, like paying off your house or raising your kids. The key word here is affordability. The best way to think about it is like you're renting protection. For Angela's 20-year plan, her monthly payments are going to be way lower than other types of insurance. And why is that? It's because the policy only has one job: to pay out if something happens during that term. It doesn't build up a separate savings account or cash value, which makes it the most budget-friendly way to get a lot of coverage for a specific time. But what if you need protection that doesn't just expire? What if you want to own it for good? Well, that brings us to our next guide and our next policy type: whole life insurance. Okay, now meet Marcus. He is in a completely different chapter. He's a business owner, so he's thinking long term. He's looking at estate planning and building a stable asset. He wants a policy that's going to last his whole life and also build up some cash value that he can count on. And that's really the heart of whole life. It's permanent, meaning it covers you for your entire life, no matter what. But it also has this second really important feature: a cash value. You can think of it like a savings account that's baked right into the policy. Part of what you pay goes to the insurance, and the rest goes into this account, which is guaranteed to grow over time. Tax deferred. So unlike term life, this is built to be permanent. The premiums are locked in, they will never go up, the cash value grows at a guaranteed rate, and on top of that, some policies might even pay out dividends, which is kind of like getting a share of the company's profits. It's a powerful tool for people like Marcus who need that stability and a financial asset that'll last a lifetime. But what if your life isn't so predictable? I mean, whose is, right? What if you need coverage that can actually change as your finances do? This leads us to the amazing flexibility of universal life insurance. So let's look at Lisa. She's a freelancer. So her income can be amazing one year and, well, not so amazing the next. That fixed premium of a whole life policy could be a real strain during those leaner times. She needs a policy that can bend and flex with her financial reality. And this right here is the defining feature of universal life. Its middle name is flexibility. It's another type of permanent insurance, but what makes it special is that it lets you adjust how much and how often you pay, and you can even change the death benefit over time. Universal life is all about adapting. So if Lisa has a fantastic year, she can put more money into the policy to build up that cash value faster. But if things get tight, she can pay less. The policy will just use some of that cash value she's already built up to cover the cost of insurance, giving her some breathing room. It's built for people whose finances are likely to change over time. Okay, for our final guide, we're going to look at a policy that combines insurance protection with direct market investment. Let's take a look at variable life. And finally, meet Eric. He's laser-focused on maximizing long-term growth, and he's comfortable with the ups and downs of the stock market. He doesn't just want insurance, he wants an investment vehicle. Variable life is where your insurance policy basically shakes hands with the stock market. It's a permanent policy, but the cash value part can be invested in all sorts of stock and bond accounts, a lot like the mutual funds in a 401k. This gives you the potential for much, much higher growth. But, and this is a really big but, with higher potential return comes higher risk. Unlike the nice steady growth in a whole life policy, this cash value is absolutely not guaranteed. It can lose value if the market performs poorly. The person who owns the policy, Eric in this case, is the one who takes on all of that market risk. This is really an option only for people with a high tolerance for risk and a long time to invest. Okay, we've met our 4 guides and walked through 4 very different policies. So let's bring it all together now. Let's put them side by side so we can really see the differences clearly. This chart really lays it all out. Your first big choice is between temporary and permanent. For temporary needs, like Angela's, term life is the most affordable way to rent protection. Now, if you need it for life, it really comes down to your financial philosophy. Do you want the rock-solid stability and guarantees of whole life like Marcus? Or do you need the flexibility of universal life to match your changing income like Lisa? Or are you willing to take on market risk for a shot at higher growth with a variable policy like Eric? And that brings us right back to where we started. The goal was never to find the one best policy for everybody. It was to find the one that fits your story. So, which one of our guides, Angela, Marcus, Lisa, or Eric, sounds the most like you right now? Answering that question is the first and most important step to finding your fit. Thanks for joining us on The Explainer.